The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time Friday. Quite a week in the market so far, and we got one more day of trading to go. Triple witching coming into a long weekend. We got the S&Ps right now positive by 11 points, trading at 36.82. We got the NASDAQ 100 positive by 52 points, trading at 11,209. You take a look at these indices, folks, well off the highs at this point. Even this week, the pullback we've had, pretty remarkable. S&Ps, I think you have the S&Ps down something like 12% over the last 7 trading sessions. Would that be correct? I think it would. Let's back things up. That brings you back to about 4150. And yeah, you traded down more than 500 points from where you were just last Wednesday to Friday action. 7 trading days, 12%. Down to 36.42. We catch a little bit of a bounce, but taking a look at the Fibonacci retracement level that we have going on here, okay, put it on your radar, folks, because, man, check out that. Right up to the 382 level. That's all you got overnight, folks. That's all you got. That bounce from 36.42 up to about 37.15. We almost nailed the 382 to the tick. And just like that, we've given up almost 1%. 1% are big. No, 1% are small numbers now. 1% happens pretty quickly was the sentiment I wanted to express. As in, we're now trading at 3,700, 36.80 to be exact. 36.8 points is all it takes for 1 percentage point right now. And you are about 34 points off of the highs. So if you think we're out of the clear, we'll find out when the opening bell strikes in about 22 minutes. Dow right now up by 54 points. We have a 29,000 handle in the Dow this morning. Make it down to 29,729 yesterday for the lows. You got back above that level overnight, and just like that, we're below it yet again. And the Russell, 1659 right now. Bitcoin hovering around that 20,000 mark. We'll see where Bitcoin trades on Friday. We'll see where Bitcoin trades on the weekend. Weekend's always very volatile. Crude continuing some volatility, man. Was talking about yesterday. We had a great conversation with our man Teddy Kegstad, as we always do, Wednesdays at 40 past the hour, folks. Quite a pullback in this crude market. But you take a look at this thing, $12 to $13 pullback seem to be just the healthy pullback as we've risen. You back things up just since where we've been in April. Now, that takes out the high that we had to 130, okay? But you look at these pullbacks, whether it was the pullback you had from April 18th to April 25th, you had about a pullback from a high of, what are we talking about, 109 to a low of 95. So you're talking about $14 there. On May 5th, we got a pullback from 111 to a low of 98. So what's that? $13 there. Excuse me, and a high of 115 on May 17th. We pull back to 103. That's $12 there. There was, a slight pullback from about 120 to 111. So that's a $9 pullback there. And then what did we just get? We got a pullback from 123 to 110. That's a $13 pullback, folks. Healthy pullbacks inside a bull market. And just like that, from where we were yesterday, crude, how about a $6 pop from 110 to 116.50? Just like that, though, we've given up some of those gains to 113.64 in crude. Gold contract sitting at about 18.50 right now, positive by $1 on the session. And we jump to notes and bonds. We get the 10-year climbing back to about 3.2% from 3.4%. Oh, excuse me. I may sneeze. Allergies just getting me right now, folks. There's a little bit of a pop for you. But have you heard of a dead cat bounce, folks? Because, man, there's very little strength right now in terms of price, in terms of the 10-year. We are up 21 ticks. But, boy, you talk about a move to lower prices and higher yields. Quite the market we have going on. And we jump over to the volatility index, the VIX, on this Friday, coming into the long weekend, Father's Day weekend out there. We got the VIX sitting at about 32.63 this morning. And just like that, these markets are giving it up, man. I mean, you were up. What was the overnight high? We'll call it 37.14 was the overnight high. And, yeah, we're dropping to levels that we haven't seen. Whoops, let's back this up. Really, from where we about closed last night, you're only positive by about 5 points on the session right now on the S&Ps. All right, what else do I have pulled up? So it is triple witching right now, and I was trying to find, my dad sent me a great article this morning on Bloomberg, and I couldn't find the article itself, but the headline was that Wall Street's $3.5 trillion OpEx may unleash short covering. I read that, and the S&Ps were sitting at 37.10. I said, maybe it's going to be a little bit of a reprieve today. And just like that, we're almost negative prices. We'll see where we come in. But yeah, the S&Ps down about 12% over the past 7 sessions. You're going to have a slew of bearish options are now in the money thanks to the equity carnage. When they're closed out, dealers who sold those protective contracts and shorted stocks in order to balance their books will need to buy back shares in order to stay market neutral. Okay, so do you get that? So we have, to read as they start, you got quarterly event, triple witching, short positions due to an unusually, benign is how they put it in the article on Bloomberg here, temporary reprieve is what it should provide. And the reason why is that you have many bearish options that are now in the money. Okay, thanks to the pullback we've gotten 12%, folks, in the span of 7 trading days. When those bearish options are closed out, the dealers who sold those, and then shorted stocks to cover the other side of their trade in order to stay neutral, they're going to need to buy back those shares in order to stay market neutral. Now, it goes on to say no one's pretending the technical flows will provide an enduring pillar of support. And I would say that indeed. Look at this drop-off that we have going on in the indices right now, folks. Not what you want to see coming into the opening bell in about 15 minutes from right now. All right, let's jump around and see what else I have pulled up here. Interesting headline out here from Bloomberg. After $2 trillion wipeout, stocks are poised for some relief. Are they? Are they really poised for some relief? I don't know. We'll find out on Friday, man. There's been no relief yet. I'm not sure why they're poised right now, just because the destruction has been so harsh. You were up 1.1% as of 7:32 a.m., folks, when they probably were writing this article. I guess they wrote it at 6 o'clock. They updated it at 7:30 this morning. They're going to need one more update by 9:30 because we're about to go negative in these markets, man. S&P is just positive by 5. NASDAQ 100 barely positive by a hair, 23 points. Dow positive by 20 right now. Excuse me. S&P, how about tumbling 3.3% in Thursday's cash market? NASDAQ 4%. I don't know if that's poised for anything, man, in terms of where you're talking about. One interesting part of this, and we'll get into this a little bit after the break. We'll tease this one, okay? Well, we got some inflows going on in this market. Maybe you're starting to scale in at prices here, but the headline on this one, for all the worries, investors are piling into U.S. stocks. Equities see inflows for the 6th week in a row. That's Bank of America. Bonds see the largest outflows since 2020, $50 billion exit cash. $14.8 billion in the week ended June 15th, the 6th consecutive week of additions, according to Bank of America. In total, $16.6 billion flowed into equities globally in that period. Bonds, largest redemption since April of 2020, $50 billion exited cash, the data showed. Investor sentiment on equities has soured further. Yeah, I would say so, folks. But interesting stats when you look at that in terms of the money still coming into this market. And all I'll say is, folks, is, you're at an area that you could begin scaling if you're thinking long term. There's nothing wrong with that. Who knows where this gets to a bottom? But 3,200, well within play in this market. Talking a lot about that price level in the den. And yeah, we'll see where we go. We're going to open in about 15 minutes, folks. Stay tuned. We'll be right back.
Of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. VISTA Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. VISTA Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Welcome back, folks. We got the S&Ps right now. You're positive by 10 points. NASDAQ 100 positive by 39. We got about 12 minutes to go until the opening bell. Finishing up the conversation when I was talking about inflows there. Let me pull up that article. Where are we? Here we are. The one thing that I did want to talk about is where those inflows are happening. Oh, come on. Where are we? That wasn't the article, was it? Did I close it? No. Oh, what's going on? Here we go. Ah, bummer. I'll find it at the break. Nope, this is going to be it. Hold on. Okay, this is what I wanted to get to. Small caps led the inflows last week, finishing up that conversation with $6.6 billion in the latest week. You're seeing a rotation potentially playing out. That's what these numbers are showing. By sector, technology, materials, healthcare, and utilities saw additions. Energy, real estate, and financials have the biggest outflows. Interesting action when you look about outflows in the context of huge inflows in the market. But even with that inflow number, energy, real estate, and financials, not surprising there, having some serious pullbacks in terms of outflows in that market. Okay. Jumping around to some of the articles I had pulled up here. Sports betting. New York sports books limit promos and asks for tax breaks as losses rise. $7.6 billion wagered online since the January launch. The state, they take 51% of revenue, among the highest in the U.S. It's amazing, right? Very tough to make money in some of these markets. That's why you're seeing DraftKings, man. They've been hammered a big time. We'll jump over to that in a moment. Mobile sports betting exploded when it first offered in New York in January, with the state quickly becoming the top market for such wagers. But 5 months in, the business is starting to look a lot like the rest of the country, with operators cutting back on their marketing and promotional offers amid ongoing losses. DraftKings, FanDuel are asking legislators to change the rules to lower their taxes after agreeing to them just last year. This is going to be an interesting one to see how it plays out. So you got $7.6 billion of bets made in New York. There's your Super Bowl week in blue there. Mobile sports, weekly mobile sports wagering handle is in the black. You got the NFL playoffs That was a big one, man. You can't beat that, right? Then you got Super Bowl week. You got March Madness in there as well. Things wane a bit during the lack of an NFL season. Celtics, unfortunately, going down last night to the Golden State Warriors, man. Golden State Warriors, 4 championships in 8 years. Got to give them credit, man. Quite a series. Tough loss for the Celtics. They were close, but not quite there. We'll see where they go in the future. They're going to be a good team, young team. Maybe they build on that in the future, and we'll see where they go from there. And we move on to the Lightning Finals. With hockey, I should say the NHL Finals. Lightning losing the first game a couple nights ago in overtime. That should be a good series between Colorado. Lightning going for a three-peat. Interesting one. And there's your promo for the Lightning on the right side of that page. New York taxes gross gaming revenue for mobile sports 51%. The average sports betting tax rate in the U.S. is only 19%, folks. New Jersey, 14.25%. Pennsylvania charges 36%. When this first came out, I remember the conversations talking about, are you going to have different lines in New York versus Jersey? Are people going to be literally going over to Jersey City just to place their bets in a Jersey sportsbook versus in New York? It's totally possible with these types of prices and the taxes that influence things. New York also includes promotional credits given to players in the calculation of taxes. Many states do that, but it makes the tax bite even higher for the operators. So many tax bites include those promos in terms of what they're talking about for revenue. But nonetheless, New York, 51% on top of it. Caesars, $300 in credits to users who signed up and deposit match on as much as $3,000. It'll be interesting to see how this one plays out, folks. These companies, okay, I'm going to take a look at DraftKings first. DKNG, you just been pummeled. I can't state it. Just been pummeled. Take a look at this weekly, man. It is a tough scenario. Now, here's what I will say. Okay, at some point, these companies have value. We all hear the unicorns, right? A unicorn is $1 billion company. DraftKings is barely a unicorn right now at $4.7 billion. Yes, I know they're spending a lot of money. They're losing a lot of money. Gambling will be something that is integral in our future, folks. It's changed the world, the way things are happening in terms of changing the way we view sports, at least. ESPN, everything is gambling now. You got the lines, you got the over, you got the under. It's going to be in-game betting as well. You know, it's going to take some time, but at some point, when you have a company that is a dominator in that industry, even if they're going to be spending, and I stated the article first because that's the reason why these stocks are trading with a valuation that's far below where they were. I mean, they have a PE in the negative. They're losing money, okay? So what that company is worth is anybody's guess when you're losing money, because the company is valued on how much money you make. So as long as you're losing money, the company is basically worth nothing unless you're a story that's going to appreciate in the future, which is what these companies may be. I have a very, very, very small position in DraftKings, folks, and I am not adding to it just yet. There's nothing to stop this stock going lower, but in the long term, that industry will explode higher at some point. Now, jumping to another stock that's been pummeled. Talked about this on my show yesterday, folks, all right? Watch how some of these equities trade on different days. Because I talked about yesterday, okay, that when you had the market trading back to Tuesday lows, you had DraftKings, okay, only retracing to about $80 when the Tuesday lows were at about $74, okay? You had DraftKings on Wednesday up something like 12%. You only gave back half of that yesterday, even when the market traded lower. Now, similar story to DraftKings in terms of just getting pummeled on equity. Roku, even at these prices, market cap of about $11 billion, okay? A little bit of a different story than DraftKings, though, all right? They do make money. They have a PE ratio of almost 90, though, okay? And that's the scary part. When you get into some of these, you say, oh, man, this is a bargain. You were trading at $4.90. You're at $78. That's got to be a bargain. Well, you're still at a PE of 90, man. Things are just bananas when you're talking about those types of earnings. But you have a company valued at $11 billion, and the one thing I was talking about was just that they are a gatekeeper for people, tens of millions of people. I think it's 66 million people, that customers that they reach with their Roku devices. Now, the news comes out today, and the reason why this thing is higher, with the market trading almost flat, you have Roku up about $2 to $3 right now in the open, so it's going to get a 2 to 3% pop right now, is that they announced a partnership with Walmart. So you see how being a gatekeeper to 66 million people, folks, that pull up their TV. Now, I'm biased. I got 5 Rokus in my house, folks. We got one in every house. That's how we access, whether it's Spectrum Television, whether it's every type of streaming, right? HBO, Netflix, Disney, of course. But these are the type of opportunities that I see value in Roku when you reach $66 million and you are the gatekeeper to people accessing a streaming portal within their television. Okay? Walmart noticed that, and what's going to happen? Users of Roku devices are going to be able to purchase items with their remotes while streaming TV programs. Interesting to see how that plays out. Fundamentally, I'm not sure how that plays out. Walmart, somewhat unchanged on that news this morning. Roku, catching a little bit of a bid. The real interesting part plays in terms of, do they ever get a bid from a potential streamer? That pop there, going back to June 8th, only 9 days ago, up to 105. That had to do with the story that maybe Netflix was somebody that would be interested in them. Well, don't get caught up too quickly. But nonetheless, Roku, open positive. It's going to be an interesting open, folks. Stay tuned. We'll be right back in 3 minutes.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and you got the Dow opening in negative territory. So much for that positive gain right now. The S&P is only positive by about 4 points. We're trading at 36.75 right now. You're looking at a NASDAQ 100 positive by 58. The Dow negative by 80 points, 29,838. We're only about 100 points off the lows we had yesterday. And the Russell up about 14 points right now. Bitcoin 20,630 right now, and we jump over, to the 10-year. We got the 10-year right now up 18 ticks, 116.12. You're talking about a 10-year yield of 3.22%, which is remarkable that you're talking about a pullback of, 20 basis points on a yield of the 10-year? And meanwhile, we're still sitting at 3.22%, but we hit a low of 114.07 on Tuesday. We almost come right back to down to that level on Thursday before popping a bit higher, 116.12 right now in the 10-year. We check out the VIX as we open on Friday, coming into a long weekend. Elevated levels, 32.71. We got triple witching. We got a long weekend coming up, and we get the market down 12% over the last 7 days. All right, jumping back to a little bit more Fed speak. So you have Chairman Powell. He is out there today. Where is he speaking right now? I had it up here. Let's see. In remarks to a conference, what conference is he at? But on the U.S. dollar, he stressed that the Fed is acutely focused on returning inflation to our 2% objective. 2%. Good luck, Chairman Powell. I kid, but man, 2%. You know, a lot of analysts, and I agree rightfully so, speaking about that maybe you get this number back to 5, maybe you get it back to 4, maybe you get it back to 3. It's going to take a while to get that last 4 to 3 to 2 number, down. Yes, it's going to wane potentially. You get it down off of the headline numbers of 8+%. Maybe you get it back to 5, maybe you get it back to 4, but to inch to where you have inflation at 1 to 2%, it is a tall order with everything going on right now, man. And you saw the market reacting this week in a big way. Consumer prices in May, 8.6%. That was the CPI number. Then, of course, we get the Fed meeting. They bring it with 75 basis points. It's amazing how quickly things can change in this market, folks. Talking about the S&P real quickly. On a longer-term basis, all right, you look at the entire run we had from 2174. You trade up to 4808. We've now given up all the gains we got in 2021. Okay, that price level was about 37.40. You're actually negative from that price level. You're talking about a 618 retracement, folks, of about 3,200. You're well below the 382 now. Remember when we were talking about where the S&Ps were sitting at the 236? And all the conversation had to do with the NASDAQ 100, folks, has already been a 382 retracement. There's nothing that could stop the S&P from doing the same thing. Well, we got there in like no time flat. Nothing stopping this index from going lower. You look at the NASDAQ 100, you are below the 50%, okay? Next stop, 10,500 in the NASDAQ 100, folks. The lows from September of 2020, you're looking at 10,656. The 618 of about 10,500, nice round number, 700 points below where we're trading at right now, man. But in context of the moves we've had, folks, okay, you look at the last I had to recalibrate my brain. Okay, those are weeklies. I was going to say daily. Back up a weekly, you don't have to go far, folks. You only have to go to the beginning of this week on Monday or even last week. We've given up 700 points this week alone. Okay, you give up another 700 points, you get the NASDAQ 100 at the 618 and the entire move higher. All the markets catching a little bit of a bid right now. As we open, you got the S&Ps up 19 points. Just for some context, though, folks, I mean, it's basically a nothing move when you think about where we've come from in just the last 12 trading days. We were sitting at 41.50 comfortably. We're an easy 500 points below that price level right now, ballparking, but 36.89 in those S&Ps. All right, jumping around to some of the other stories I had pulled up here. Now, Elon catches a lot of grief, rightfully so, man. The way he conducts his business sometimes, the way that he just outright lies in some of the things he does. He acquired that position in Twitter, folks, remember, by flirting the regulatory filing that he had to file, okay? He was able to acquire many more shares in Twitter that he normally would have been at a much lower price than if he had filed on time. All of this stuff, right? Not okay, to put it lightly. But the other side of things, my friends and I were having this conversation recently, too. So he had an all-hands meeting with Twitter, right? And he was even catching grief on the way he signed into that meeting, which was, I think he was just on his phone, and they were kind of giving him grief. And I said, come on, man, you got to be at least fair to the guy. He's the richest man in the world. He runs multiple companies. If he wants to jump on his phone to patch into an online meeting, that's where the future is, right? Say, well, he could have taken it a little bit more serious. He's just sitting there on his phone in his kitchen. Meanwhile, you could have been in an office, maybe you're on your computer, maybe the setup's a little bit cleaner. Nonetheless, okay, so he catches a lot of grief unjustly as well. And this one, you really got to separate the two, folks, in terms of public companies and shareholders, okay, versus employees of private companies. I mean, he is a brilliant man, no matter what you say. And the companies that he has founded, okay, are doing amazing things. So SpaceX has fired a number of employees responsible for an open letter critical of behavior of CEO Elon Musk. The open letter, which began circulating among staff in recent days, called Musk's behavior and tweets a frequent source of distraction and embarrassment, particularly in recent weeks. The letter was reviewed by Bloomberg. It called on SpaceX leadership to condemn and distance itself from Musk's personal brand. Now, there is an argument to be made, okay? I've talked about it as well, and this is where things get fair. You look at where Tesla has gone from, okay? I'll have to get the exact date. I think that was the day. Let's see when Twitter pops, because Tesla's just been destroyed, man, since Elon went after Twitter. Yeah, so Elon goes after Twitter. Yeah, it was April 4th. Okay, now the market's been devastated as well. It's anyone's guess where these stocks both sit. But for some context here, folks, this is the Monday that the world finds out that Elon has a stake in Twitter. I don't know why you traded higher on Monday. The market gave you a one-day reprieve, and then Tesla trades from 1150 down to a low of 650. Okay? Now, Tesla has, right now, 2/3 billion shares trading. Call it 668 million. Oh, no, excuse me. 1 billion shares outstanding. Okay, so simple math. Billion shares outstanding. That is a loss of about $500 billion, folks. Okay, $500 billion since Elon has made it his quest to go after Twitter. Now, I would say that shareholders have a very just complaint that their CEO is tarnishing the market cap of Tesla by going after another company, selling his shares. Okay, so you get into that conversation. But this whole conversation where employees, I mean, I know the job market's strong. Maybe that's why they're doing it. But if you think that you're in a private company, folks, and that you can just, come at the CEO and put out an open letter that basically he's ruining the company, well, guess what? You're gone, okay? All of them are gone that put this letter out. And the company investigated the open letter and has terminated employees involved. There's nothing controversial about that at all, folks. That's how companies work, especially private companies, okay? That's the beauty of living in, a capitalist democracy, that you run a company, you have employees in there that run a revolt and try and get you out because they don't like how you're running the company. Well, guess what? You're gone. Go work for somebody else if that's the deal. And it goes both ways, right? I'm a huge believer in unions, folks. My mom worked for Verizon forever. The only reason she was able to retire around the age of 60 is because she is a union member. The real reason she was able to retire as a union member in Verizon is because they're trying to get rid of all the union members to bring in low-wage workers, even American workers, okay, that aren't union, because they're a lot cheaper, and those people aren't going to be able to retire. So you can do both sides of things, You can't, people out here all hemming and hawing that Elon, he can't be doing that. Just separate the two in your brain, folks, okay? Gets a little bit easier that way. All right, stay tuned, folks. We got the S&Ps up by 14. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. You're looking at an S&P up 32 points right now. That's up 0.9%. NASDAQ 100 up 1.4%. You got the Dow right now up 0.2%. Keep in mind what I said at the beginning of the program, talking about you have option expiration. You have a lot of options, okay, that had bearish options now in the money, thanks to that full pullback. Those are going to be closed out. Okay, now maybe they wouldn't have been closed out if the market hadn't traded down 12% in the last 7 to 8 trading days. When those bearish options are closed out, the dealers who sold those protective contracts and shorted the stocks in order to balance their books need to buy back shares in order to stay market neutral. Maybe that's some of the bounce that we're seeing right now, man, and maybe it wanes. Something to keep in mind, folks. We got a lot of influences in this market right now, and you got a lot of volatility, to say the least. Always interesting when you come into a long weekend on top of things, just compounding the volatility potentially, as we're only 13 minutes in the trading day, folks. All right, let's jump around to some of the Chinese stocks, man. JD, they're up 5.2%, 5.6%, giving up some of those gains, though. Excuse me. They're going to possibly expand into food delivery, according to their CEO in an interview with Bloomberg. That would put them in competition with Alibaba and Meituan. Is that how I put it? Meituan? Which dominate the business. JD, though, they're higher on that news. Now, jumping right down to Alibaba, okay? Alibaba surging as well. It looks like Ant Financial might have a chance after all. So Alibaba's up 7.5%. This one surprised me, okay? Reuters reported the China Central Bank approved Alibaba affiliate Ant Group's application to form a financial holding company. That revives hope of a possible Ant Group IPO. Do you remember when all this started, folks? Let's back up the chart a little bit. And that is a break that we have had out of this downtrend channel, folks. This month, it's the first time it's happened. I got to back it up more than a year. There's your three-year weekly, man. BABA at 319 in October of 2020. We've been in that downtrend channel since. And maybe that's the breakout that this equity's been waiting for. BABA up 7.2%. Maybe Ant Financial has a chance to go on IPO. Maybe Jack Ma will be able to go out in public in China again. I kid. But to some degree, folks, keep in mind what happened in that country, but also keep in mind that President Xi in China needs a bustling economy to keep the citizens there at bay. He's not going to shut everything down, okay? He slapped it down in dramatic fashion, but he needs the economy still to be moving. These stocks are not going away completely. You got BABA up 6.7%, and that's a decisive break in a channel that it's been in. It's been a well-defined channel, man, for the better part of about a year and a half, even longer, in that equity. And today you catch a bounce, JD's got a bounce going on as well with some of those Chinese equities trading higher. Let's jump around to some of our FANG stocks. As you get the NASDAQ 100 up 156 points. Amazon up 1.6%. On a weekly basis, boy, we got a tough couple weeks, man. And Amazon right now, and just in equities in general, remarkable when you look at where we were just at the end of March. Amazon, 170 post-split. We just hit almost 100. You jump over to Apple. Apple shares up 1.4%. Apple sitting right at the 382 of the entire move higher it had from COVID, $52 to 182. Apple was at 81 bucks pre-COVID. There's still a lot of appreciation in some of these NASDAQ 100 stocks, folks, above where we were prior to COVID, which is a little bit worrisome, to say the least. Microsoft shares sitting at the 50%. If Microsoft's at the 50%, Apple can be at the 50%, folks, real quick. And Apple at the 50% is another $14 lower from where we are. You just got to be aware of the moves that are possible, at least, and make sure you're positioned well enough in these markets to make sure you're either willing to take that risk, okay? Larry Pesavento has a great quote, folks. He says, don't think about how much you can make. Think about how much you can lose. You think about how much you can lose. The other side of that takes care of itself, because you got to always keep track of how much you can lose, because that's where you can get hurt. So think about that. Think about where you are. Think about where the equities possibly can trade to. I mean, I talked about, right, talking about Roku. So Roku's up 3.5% today. They got a deal going on with Walmart that you'll be starting to buy Walmart products with your Roku device. It looks like it can't get any worse, but even on a stock like Roku, where I talk about some of the upside potential, you got a PE of approaching 90 on Roku. So be careful there in a big way. All right, let's jump around to some of the other equities that are moving this morning. U.S. Steel. They've issued better than expected guidance. The steel producers' results are being helped by rising demand and higher steel prices. You jump over to U.S. Steel. They're up 4.9%, but man, you're just bouncing off of these lows that we saw last year, right? Look at that acceleration in terms of 39 bucks, you get cut in half. You're back to about 20 bucks, and that's an area that had support for the better part of 2021 for U.S. Steel. Adobe was lower this morning after the software company weaker than expected guidance for the current quarter and the full year. Headwinds from the war in Ukraine and unfavorable foreign exchange rates, although its most recent quarter did beat estimates, but they were lower pre-market. Whoops, ADBE, they're down about 4%. There's a pullback for you. Below pre-COVID levels, you're back to the beginning of 2020 for Adobe shares, down another 14 bucks this morning. We talked about Roku, Alibaba. You got health companies, Snapchat. This is an interesting one. Snapchat. Let's pull up Snapchat. Talk about a fall from graces, man. $12. You're up 1.6% with the market. You are well below where you came into COVID, well off that $83 high. They are testing a paid subscription model that would give users access to exclusive and pre-release features. Folks, I'm 42 years old. I may not understand the youth generation of social media. I know Snapchat. I understand some degree how people use it. Who is going to be paying for a premium subscription to Snapchat? I just don't see that happening at all. Maybe they add some revenue, but that's not the future of the company, folks, is charging people to use their app. Not going to happen, in my opinion. American Express, they get an upgrade to outperform from neutral at Baird. Relentless panic selling has provided an attractive buying opportunity. AXP, you jump over to their shares. You're up about 1.5% right now. You trade from $199 to $140 on this equity, and you're going to see some of these upgrades. You're going to see some of these updates, was the word I was looking for, to the analysis of some of these equities, because you are nearing areas, folks. Valuations, you can't argue that some of these equities, valuations, getting a lot more attractive, at least, than when it was trading at 200 bucks. Just this year, you're trading at 140 for American Express. Let's check out Visa right now. Visa, 252 last year. We were at almost 230 just as recently as April. You're trading at 187. That's almost where we came into 2020 for Visa as well. And Utz Brands, looks like people are going to be eating plenty of potato chips. The snack maker stock up 5.4%. Goldman, it's a buy from neutral. Strong position in the fast-growing salty snacks category. I didn't know that salty snacks were just, fast-growing. potato chips? Is that a fast-growing segment of the market? The stock certainly doesn't say it, but this is, again, probably a valuation deal, right? You were at $30. You were at 18 at the beginning of the year. You're trading at $12 right now on UTS. Yeah, that's almost an all-time low, maybe when this thing went public. Stay tuned, folks. We got one more segment. S&P's positive by 31. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps right now. We're up 36 points, putting things on a 15-minute basis. You see the action. We're just back to where we were pre-market, though, folks. This will be an interesting level. You had the S&Ps just touch 3710. You just popped a full percentage point on the open. I mean, you can't overstate the volatility, folks. We're so used to it right now. We're so used to the market having volatility that is just extreme in every way possible. I mean, how many times have we had a 12% pullback in 7 trading days? And that's in addition to already having an extreme pullback, right? So this morning, you trade 1% higher overnight. You trade 1% lower into the open. You open basically flat, and we get a 1% bounce within the span of a first half hour of trading. Volatility not over yet, folks. You get the Dow back above 30,000. You got Bitcoin up $20 on the session. Going to be an interesting weekend, I imagine, for those crypto traders out there. Jumping over to one last headline, Dalio. Yeah, so he's short in Europe in a big way, man. This guy is brilliant, folks. Bridgewater, they run quite the shop. and they have at least a $6.7 billion in short positions against European stocks, which aggregated the firm's public disclosures. They are generally bearish on the global economy. They've already positioned itself against sell-offs in U.S. Treasuries, U.S. equities, and both U.S. and European corporate bonds. Always interesting to keep your eye on those that have done extremely well. I forget what he had for first quarter earnings. I think they were decent numbers. Did they even say it in here? Yeah, I don't think we see it yet. But he has performed tremendously well, to say the least, and he is not too bullish in this market, and especially not over in Europe right now. And we'll see where that one goes. Let's check in on notes and bonds right now as we come into the end of the program. Giving it up a little bit. So we got the 10-year now positive by 10 ticks. Almost the same thing. We're used to so much volatility, folks, that it almost doesn't show up on the chart, the type of volatility we're getting on a constant basis. You just had the 10-year drop half a point since I came on the air almost. 845, you were at 116.18, and just like that, folks, we're trading again down half a tick, and we're at 3.25%, the yield on the 10-year. All right, folks, triple witching. Friday coming into a long weekend. Have a great Father's Day weekend out there to all the fathers, grandfathers. S&P up 37, folks. NASDAQ up 181. Have a Friday. Stay tuned. We got Basil coming up next.